Right, hi everyone, this is David Pegler. Look at the European market for April the 29th, 2010. Welcome to FX Bootcamp. Let me remind you the purpose of FX Bootcamp is education. This is not an alert service. I'm not going to make any trade recommendations during the course of a day, but what I will do is conduct some live fundamental and technical analysis. With a bit of luck, we can put together some good positive trade plans. Please bear in mind that trading heavily leveraged is always risky business, so I encourage you not to trade your hard-earned money until you have a good proven track record of success using a broker's demo. Fantastic. Alright guys, let's look at cable, and then I want to actually look at an S&P chart, something we haven't done in millennium, and probably, purely because nothing's really changed in a long time, but I think we've seen a bit of a change over the last few days, so I want to take a detailed look over there very quickly. But here is pound. Now, you're looking at a daily chart, alright, for cable, and honestly, I think you're going to have to bring some A game today. There's going to be opportunities, but you're going to have to be smart about it. Alright, so this is the daily chart. If I grab a fib now of the entire rise, you'll notice that we're coming off this little 50% of the whole rise, right? We have not been able to close a candle below there. Plus, this is where we previously rallied from on the pullback around the sort of 51.50 area. Alright, so my expectation would be of this level that we're going to sort of try kick back up to a fib of the drop, okay? But here's where it gets complicated, okay? I mean, that by itself isn't particularly interesting analysis, and you'll see on the 4-hour here, like I mentioned before, haven't been able to close a candle below that 50% area, call it 51.40, and these previous swing lows, okay? So here's the thing, all right? If you look at the 4-hour, you got a lot of people seeing this sort of a big double top, break of the last couple lows. So on a 4-hour basis, that's confirmed a bit of downside direction. But like I just showed you on the daily you're making higher lows and higher highs. So you got daily traders saying, yep, this is long. You got 4-hour traders going, yep, this is short. And now we've come to the competition zone. Alright, now the fight begins. So obviously, where is the correct spot to look to take a real good look at the short side here from a sustained basis? And this 5300 level looks brilliant. Previous swing lows, 200 EMA on the 4-hour, 21 EMA on the 4-hour, plus the 50% fib and the psychological level. Wild horses are going to have to keep me from taking a gander there if conditions are right. Now, this is why I think this is, once again, not particularly complicated analysis, but here's where it's going to get funky. Alright, if you take a look at this hourly chart, okay, and here's, I know we made a lower low, but I consider this a double bottom, almost erase this little wick, just because we weren't able to close, any kind of candle below these previous swing lows, and we worked above it, so therefore I consider this a little double bottom trying to create itself, alright? But here's the thing, guys. If we find ourselves up around sort of 52.50, basically in line with this junk yesterday, alright, if we find ourselves in a zone around the London Open, I think you're going to be looking at a fib of the rise. In other words, something like this. Okay, in other words, or something like that. Now, that doesn't look like a whole lot, but that's a good amount of pips to the downside. Then at that point, I would entertain a long, try and take us up to that 53 level, in which case it might overshoot a few pips, but then I'm thinking short again. Alright, so that's more or less how I expect this to play out, or similarly said, push down a little bit like this and then head on up. But, the first example is what I'm looking at for the pound today, sort of a short, long, then sustainably short. Now, it is Thursday moving into Friday, so we're going to have to see how the equity markets relate to each other, but that's cable in a nutshell, guys. Not particularly difficult analysis there at all. You're just going to have to be smart about where you take your shots, because I don't think you're going to have a pure directional play like we've had the last few days. Alright, I think it's going to be a little more contested than what you've seen, and that's going to mean a different skill set from you. You're going to have to go into more sort of nimble, quick scalp mode. Alright, it's not just flow down to the middle of the stream and, cruise downstream for the day. It's not going to be that type of day. Alright, so keep that in mind. Now, one thing I am watching, not necessarily intraday here, but this is an Aussie Yen daily chart. Okay, pretty good looking little trap here, swing high, little multiple tops, and then, here are swing lows. Okay, so basically we've run out of room. No, on a daily basis, it's tight. On a intraday, it's still 200 pips to play with here, but I think that this is going to be a very significant little trap, and I would be careful trading the upside break. Frankly, I think we could break up there and be a fat fake out and roll over to the downside. And if you do the measurements here, just take a measurement here, project it down. This has a pretty good drop waiting for it. So, don't take your eye off it. Even if we don't see a good break here Thursday, Friday, expect something Monday, Tuesday, Wednesday. Okay, this is going to be definitely a pair. I'm going to bring up more next week completely. Now, the reason why I bring that up is not only all the yens look fairly talented right now, but check out this S&P chart. All right, so again, here's your daily. Okay, and higher low. Now, currency and equity market correlation has been wavering quite a bit lately. I mean, let's be honest with ourselves. But I do see when we have down days on the equity markets, I do see the currency markets respond, and particularly the yens. I think that the correlation gets tight, if not for a short period of time. You just got to be on top of it to be able to capitalize. All right, so making this once again a daily S&P chart, making a series of higher lows and higher highs. All right. Well, look at how this bandwagon has now finally come to an end. Okay, and a pretty good looking little trap, like I showed you there. But notice now how we've made a lower low with respect to these two previous lows. That's the first time that's happened since the middle of February, folks. All right. And what does that mean for those folk not really price action orientated? That means that now we have a little bit of a change in trend bias, and we should go and fib the rise now. Right? We should make a big fat fib of the rise, and if I take that fib, okay, and that puts us around sort of 1150, not a mile down there. Okay, that's also previous swing lows. At that point, I fully expect buyers here to take us to a fib of the drop, and then the fight begins. Okay, we'll probably see a range here for a few days. But I do think that we are going up to retest this trend line to come down a little bit. Okay, that's what it looks like to me. I've been wrong before, but, if it breaks the highs, fine, we're continuing. But as it stands right now, you can only go with what you know. It definitely looks breakout, pull back short. And what's that mean for your currency charts, right? I mean, that means that, your yens all going to drift down a little bit if we get ourselves a sell-off here. So look out for some price action to confirm this in one way or another on all the yens. All right, Aussie yen I just showed you just out of interest because we're in a very clean daily looking trap, so to speak. All right, so there you have it. Once again, I'm not sure the yens are necessarily for today or even tomorrow, but definitely next week they're gonna pay us in spades, I think. So keep your eye on that. Absolutely. All right. My name is David Pegler. This has been a look at the European market for April the 29th, 2010. Please leave me some feedback at YouTube, our blog, Facebook, Twitter. Much appreciated, and we'll chat to you tomorrow.